I think some of this commentary about we have to go to neutral and go beyond neutral, you are seeing is too much. You are seeing some slowdown, just exactly as y'all were describing. Look at the housing market, look at autos. And by the way, you see it in the equities, obviously. Look at what's happening in some of the small business dynamics around. And by the way, people are worked up about why inflation is going to overheat, inflation's overheat. We just got a core CPI report that ran for 3 months at 1.8. The same number last year, up to the October print last year, was 2.23%. So the overheating, accelerating inflation, I don't see it either. Do I think the Fed still goes in December? I think so. By the way, I'm pretty certain they're going to go in December, but I only think they're going to go 1 or 2 times next year. I don't think you need to press it, and I think they will pause and look at it and evaluate what has happened to inflation. And in some of these leading indicators, you saw it in Philly Fed last week. Some of these leading indicators are starting to definitely stabilize, if not turn down a bit.
So BlackRock's bond king is firmly worried about a Fed policy mistake.
No, I wouldn't say I'm worried about a mistake. I think that I think they're pretty pragmatic.
You just said it, but in different words, though, Rick.
Yeah,
you said that you are worried that the Fed is missing all of these other signals that we see, that you see, the reason why you're only looking for 1 to 2 hikes next year. That is not the Fed's perspective.
So if you were sitting on the Federal Reserve today and you'd evaluate all the data today, the growth is pretty good. The question is when the Fed is going to move next year, what is that data going to look like? And I would argue that the data, you've pulled forward a tremendous amount of CapEx. You've had this tremendous growth that started actually a couple of years ago. When they evaluate that going forward, going in the next, certainly in the next 2 or 3 quarters, I think you'll see a different set of signals, and that's why I think they don't have to go that far.
The move in rates, now that we've seen rates drop, is it confirming to you not only that maybe it's because the economy and maybe globally is a little weaker than people think, but that the end of the recent upcycle has been achieved, that we've topped out?
So, I mean, we've said on your show for many, many months, we thought the 10-year could go to 3.25. I think it hit it. It may have come within a half a basis point. I think you're still going to see rates move moderately higher. The comment said, Jim and Kevin, would I buy a 10-year note at 3%? Not. But, by the way, the front end of the yield curve at 3%, where you don't take a lot of interest rate duration risk, that I would buy. That carries really well, particularly married to equities. But do I think we're going to go? I think when equities stabilize, I mean, part of why rates have come back again is because of the sell-off in equities. When equities stabilize, do I think we'll trend a bit higher in rate? I think we're going to trend a bit higher, but just not that far.